Hello and welcome to Money Matters. I'm Sarah Peterson here with Dylan Greenberg and Todd Glick Jr. of Greenberg Financial Group. Hello, gentlemen.
Good morning, Sarah.
I love it because you guys are the next generation and I cannot believe how much I learned from you. It's so cool. You're both old souls.
Thank you.
Oh, well, thank you.
Yeah. No, it's great. You have such a grasp of this industry, but with a different perspective, I think, than a lot of people your age would have with the same amount of knowledge. And there are so many tools out there now that I have literally no idea how to utilize that are helping us with our financial planning. I mean, the tech world is just exploding with all this stuff, and I don't even know where to look. I think most people in my generation don't.
Well, and technology can just, what it does is just help you do things quicker. I mean, when we're looking for credit cards, you can go to NerdWallet and they will compare 8 credit cards of what you're looking for. Do you want cash back? Do you want 2% back for restaurants? What are you looking for, the best idea? And they could just compare it immediately. And it's much quicker, and then it saves you time to do other things. And that's the best thing about technology is the more advanced we get, the more time we have for doing other things that we don't even know about yet.
Yeah, Credit Karma is another great one for the credit side of things. So just, what's your credit score currently? What are some of the loans or refinance options you have for some car loans or house options? Is there a 0% APR card? Most people don't even know those things exist, but you can actually find cards that if you have, say, $2,000 on an old credit card that's being charged interest, well, if you have a 0% APR card that you can qualify for, you can transfer that over. You'll pay a 3-5% transfer fee for doing that, but then while the money's over there, the balance for 18, 21 months, whatever your intro APR period is, you're not paying any interest. So you can actually make a dent into your debt. So there's certain debt repayment plans that we have for clients that when we actually see what they have in debt, what are they paying per month, what are their rates, we can put together a plan to help them get out of it. Otherwise, some people, they just try to throw the ball at the highest monthly bill. That might not always be the best bet if that's not the highest interest rate. So there's a way to actually plan for your debt side of things, but also there's a way to plan for your budgeting side of things. Like Rocket Money is a great tool that I use where it will classify all of your spending into different categories and even show you your subscriptions. And you will see every single day you have a subscription and you realize, wow, I have a lot of subscriptions.
Do you link it to your credit card so it knows what you're spending on all these different avenues, like your bank and everything feeds into that?
Exactly.
Wow.
It makes it very easy, and they categorize it all for you. They know you how much income, and then at that point, you don't have to worry so much about doing it yourself. Me and Dylan, we do the Excel budget every single month. And that's hard for most people because you have to be disciplined to do it.
Will you not use that word in front of me? I really don't love that word, that B word. And I don't want my husband to know about that app because then he's going to track all my expenses. I like
And it's
ignorance.
not so much about budgeting, though. It's more so just understanding how much you're spending, because then we can understand what we need to plan for. Because if you think you're spending $7,000 a month, but you're really spending $9,000, how is a financial advisor going to be able to really put together a plan for you? So finding that actual per year spending is very important.
Well, that's the biggest thing we see when people come in to meet with us. Their biggest problem or biggest task was to find what their monthly spending was. And most of the time they come in under because they think they're saying, okay, I'm spending, we spend $3,500 a month. But they're telling us also at the same time they're making $8,000 a month as a couple. So we're saying, okay, so in that sense, you're saving $4,500. They say no. So we say, where else is the money going? And then they're like, no, you know what? Okay, we probably spend more. And then it turns out they're spending $6,000, which are still bringing in $8,000. So now they're saying, okay, we're actually only saving $2,000, but it becomes more of a realistic conversation, and that's where we can actually help. We can't help unless we know everything going on.
Yeah, I mean, that's why when we do financial plans, we put together goals and buckets. So we have just an annual expense for your basic living expense. Then we have a budget just for your healthcare expense, because that will change. If you're on private insurance, it's going to be more expensive. And then once you turn 65 and go on Medicare, it's going to be a different cost for you. If you're on Medicare Advantage versus Medicare Supplement, that's going to be a different cost. So we have a different budget allocated for that. Most people want to do a lot of traveling in retirement, right? So we put a $10,000, $15,000, $20,000 a year travel budget. in that plan. But also, we know that people aren't going to be traveling late into their 80s, so we only do that for about 15 years. As most people will retire in 65 with that bell curve of spending in retirement, you do most of your spending in those go-go years of around 67 to 77, and then once the health starts to go a little bit, you don't do those big trips.
The no-go years.
Yeah, the no-go years.
Exactly.
Well, this is what I love, is that, all of us are looking towards our future and wondering, how do I get from here to there, right? Because at some point we stop accumulating, and how do we still live that lifestyle we want to live in retirement without that accumulation phase?
The deaccumulation phase, right? And that's the really scary part, and that's where the plan really comes in, because you want to know, how much am I going to get per month? How much is my paycheck that I'm no longer getting from my job? What is that going to look like each month, and what are my sources? And that's why the plan with technology is able to show you all your sources on the screen when you come in with us in a very simple, easy to digest manner.
And it helps to show in the plan, because if you have multiple accounts that you're using to take income from, you're going to deplete one account most likely. So it's good to see in the plan that as your overall plan will still work, even if you deplete your most tax efficient account, we're going to use that first. Or we're going to use that, and it's going to drop down if you're going through retirement. But then you still have these other buckets that are full. But if you're not doing the plan, if you're not trying to lay everything out and make sure everything's in place, ready to go, you see one account go to zero, you're scared about the other ones. Okay, now they're all going to zero. But in reality, you're using this one, these are still growing. So when you start to use these, you're going to have a lot more money to be able to keep going. And that's why the overall plan is successful.
Yeah, the efficiencies are hard to see when you're just trying to build this out in an Excel. But when you're coming in with us and you use the financial planning software we use, you can start to see why some of these things will actually make sense for you. Things like Roth conversions. If you try to simulate how a Roth conversion is going to help you yourself, good luck. There's a lot of implications that impact your different cash flows, like Medicare IRMA brackets. Most people just don't know the implications when you do a Roth conversion. It sounds really good, but it might not actually make sense. That's why you have to come into your plan, put everything into it, and that way we actually know what's going to be the estimated lifetime savings from doing a Roth conversion strategy, or whether or not it actually makes sense in the first place.
In other circumstances, I might have told you ignorance is bliss, but in this case, I will say that I think that's what's holding a lot of us back, is maybe I don't want to visit it because I'm afraid you're going to tell me I'm spending too much, I shouldn't be spending, I'm not going to have, but I would rather know that information now so that I can make the changes necessary before it's, too late, till I get too close to retirement and it's kind of like, okay, maybe we should have thought of that 10 years ago. I think that the earlier we start planning, the better.
Oh, always, but it's never too late to start planning either. It's always something you're going to have to do at some point.
Yeah.
So that's why we try and make it as least scary as possible, because you do need to know these answers at some point. You don't want to just live in the dark in your retirement. Otherwise, eventually you will give in and go do it, and it's just going to be late at that point.
I really love the idea of these quarterly workshops, because I know personally that's my personality. I love a group exercise class. I just like the environment where we're all feeding off each other. I also think it allows us to understand that other people have some of the same questions and concerns that we have, and makes you not feel so kind of illiterate in this area or alone. It just feels like, oh, okay, we're all in this. We all have these same types of questions, and we all need that same type of education. So this is an education we can hopefully give to you, the viewers at home. And so whether or not it's with the quarterly workshops, or you want to come in and meet with Dylan and Todd or Dean, this is something you can do, and it is completely complimentary for our viewers. So that phone number is 520-544-4909, or scan the QR code at the bottom of the screen. We're going to take a quick commercial break, and we'll come back and talk more about your money matters.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dylan Greenberg and Todd Jr. of Greenberg Financial Group. And they are giving us all, including me, a lesson on technology and how to utilize that for our financial health. And I have to admit, I really don't understand the concept of Bitcoin. It's so buzzy, everywhere. But somebody like me is just like, okay, hands off. Like, don't get this. I can't see it. I can't feel it. I don't know what it is. So maybe you could shed some light on that.
Yeah, it's a very talked about space right now. Last year in 2024, the first spot Bitcoin ETFs were introduced, and it allowed institutions and everyday retail people with an IRA or brokerage account to actually invest in it. And that's when it started to get a lot more attention from money managers, and still only about 36% of money managers are allowed to put their clients in a Bitcoin or crypto-like product. So it's still a very new space, but there's a lot more regulation specifically for the Bitcoin asset specifically. The other cryptocurrencies, there's not so much quite yet, but Bitcoin has been classified as a property. It's understood to be basically like a commodity. There's no individual running it. There's no group of people running it. It's a decentralized network, very similar to how gold is. There's no one running the gold network, right? Everyone owns portions of gold, but as a whole, the network has a market cap. And as the dollar that is priced in gold gets more devalued against the supply of gold, the price of gold goes up over time. A lot of people think of Bitcoin as almost a digital gold 2.0 because of the fact that it has absolute scarcity. Now, gold doesn't have quite absolute scarcity because it will always mine a little bit more each year, especially as the price goes higher, more people mine the gold. And when people hear about Bitcoin mining, their head blows up because they have no idea what the heck that could mean, because as far as they're aware, it's a digital network. How do you mine something that's digital? Well, these miners aren't actually mining anything. They're just computational servers. Think about them as pretty much a big heater that really just does one thing: solve really complex math algorithms. The reason it does this is it has to confirm each transaction that's added to the blockchain. And that blockchain is what runs the ledger that is behind Bitcoin. The reason Bitcoin is such sought after is because people don't trust governments to not debase their money. We all understand inflation, and if you look at the past 50 years, our dollar has been debased rapidly, and our purchasing power has been diminished because of that. People are no longer wanting to have their purchasing power diminished, so they look for things like equities and things like gold and houses so that their money works for them and doesn't decrease over time as it does in the dollar, and other currencies throughout the world as well. So Bitcoin is another way of having people who believe in it and think it's going to be around for a long time to invest in something that's scarce and to help them hedge against a long-term debasement against the dollar.
I mean, you did clarify a lot of things for me, but I'm still, I don't want to.
Start with your first one then.
Okay. What I don't understand is how somebody, I mean, if only 36% of people are utilizing it, then how
Money
do,
managers,
okay.
yeah.
But then individuals can learn and invest in this on their own.
Yeah, the craziest thing about Bitcoin right now is it has a market cap bigger than Amazon. So it's bigger than Amazon itself. It's actually I think it's the 5th largest asset class in the world. Gold is the largest. It's currently $13 trillion market cap. Bitcoin is right around $2 trillion. We know NVIDIA is the most valuable company in the world right now. They're around $4 trillion market cap. Wow. So all these different are just asset classes. One of the biggest asset class that people use their money to save their wealth in is the US dollar. And what we've seen over the last 50 years is if you hold your wealth in the US dollar, over time you lose money, only because of inflation. The dollar itself is not backed by anything. We know that. The only thing it's backed by is the claim that I can go to another place and they'll accept it. And as long as that continues, we're all good. We all have to pay our taxes in the dollar, right? So there's an intrinsic demand for the dollar. And as long as that takes place, it'll survive. But guess what? The dollar wasn't always the world reserve currency. We actually used to use seashells as societies for money. We used tally sticks at one point.
Salt.
We use a lot of different, that's where the word salary comes from, right? There's a lot of different technological movements that have advanced our money forward that allows us to keep our societies more accountable to one another when we're trying to do business transactions. To me, this is just the next step forward of that.
Yeah, in a sense, it's just what will you accept from me and what will I accept from you? And right now the dollar's the most powerful one, but there's no saying that Bitcoin can't be the next step, especially in a digital age when our checking accounts, our credit cards, everything's online already. We don't carry cash much. Like our generation doesn't carry a lot of cash because we have our credit cards, because we have our debit cards. If we ever need cash, we'll just go to an ATM, but it's very rare. You can just tap, you can just use your phone, you can use Apple Pay, you can use all the technology.
But is it liquid? Can you buy it and then decide to sell it? How does it work?
Yes, just like you could a stock.
Just like
Exactly.
And just like a stock, you're only going to sell it for what someone else is going to buy it for.
Okay.
Just like a house, right?
Yep.
I mean, your house might be worth $400,000, but if you can only sell it to someone for $350,000, that's the true worth.
Is it changing on a daily basis?
24/7 trading,
Okay.
and there's a bunch of different trading platforms that can use it. So you got Gemini, you have Coinbase. The way we buy it is through ETFs because that's how money managers can buy it right now and sell it. But that's trading on it. But it's held there. The assets are actual Bitcoin, but we just buy the ETF from it. But there's what, probably 10, if not more, trading platforms that you can buy it on and sell
an
it.
ETF is just an exchange traded fund, and it just gives you direct exposure to the Bitcoin price movement.
But you're not buying the direct Bitcoin, you're buying the
Not the way
exposure
we
to
do it, yeah. Not the way money managers do it, but as an individual, you can buy it.
People losing passwords and things like that.
Correct.
This is a real easy way of not having to worry about any of that.
Yeah.
You have your institutional account just like you have anywhere at a Schwab, a Fidelity, an RBC, those type of companies. That's where you would buy the Bitcoin.
But in the digital age, it seems like a logical step that the Bitcoin could be the next dollar.
A lot of people will put gold in their portfolio, 5-10% allocation to hedge against the long-term
I'm trying to support
devaluation.
gold every day.
Well, yeah, we have a fascination with gold from very long back, right? But at the end of the day, people are trying to preserve their wealth in the best way they know. So people have been using gold for a long period of time as an inflation hedge. What we're trying to say is maybe Bitcoin's that. If you're interested in it, give us a call. This is a very risky asset. So this is not something we're recommending by any means at any point. But what we can be, and if you're interested, is we've started people at a 1, 2, 5% allocation of the portfolio because it is a very volatile space. And if you're just getting into it first time, you don't want to get scared and sell at bottoms and have a bad taste in your mouth. There's a prudent way to do this. And if you actually have a long-term thesis behind it and believe in it, then we can help you achieve that goal.
It's so interesting how many different methods of investing there are now. And if you don't know, I mean, you don't have this education, so I feel like some people just, the old school way is just park the money, right? And you're missing out on so many opportunities depending on what your long-term goals are if you don't have a plan like this in place.
If you're going to park the money, at least do it in the S&P 500. Now, we talked about on previous shows, they will always put the newest and latest, greatest 500 in there that are working on these newest and latest, greatest products.
Well, to me, I mean, we've talked about this, that there should be so much more education in schools on this. And hopefully the goal is you graduate from school and you're given a job and then you start making your own paychecks. What do I do with my money long term? How do I save? And how can I maximize every dollar that I make? And this is just such a great way to get that education, whether it's through your workshops or it's with a one-on-one meeting, coming into your office. What a great team approach that they have, and knowing that you have somebody always looking out for your personal custom plan that you need in place. And that phone number is 520-544-4909, or you can scan that QR code at the bottom of your screen. We have so much more to talk about with this whole tech industry and how to utilize it for your money matters. We'll see you in a minute.
When was the last time you saw your financial professional? Are you getting the most out of the strategy that was created for you? Although you've done a great job finding someone to help plan for your future, are you 100% sure that you were given the right strategy? We can help answer these questions and more with a complimentary second opinion evaluation. We will take a look at what you have in place and then help determine if you're well positioned to get the most out of your future retirement income. In the event that it is not, we can help by making suggestions and showing you how to get on the right path. You wouldn't get just one opinion when it comes to a major health decision, so why would you treat your most important financial decision with such disregard? Call today for your no-cost, no-obligation second opinion evaluation to see if you're getting the most out of your retirement income plan.
Hello and welcome back to Money Matters. I'm Sarah Peterson here with Dylan Greenberg and Todd Jr. of Greenberg Financial Group, and we're talking about the tech age and all of the apps and all of the financial things that we can use, the tools in our toolbox. But I have to say, to me, the biggest fear I have in utilizing a lot of these things is all the scams. There is so much out there that we kind of need to be cautious of. I don't want to say afraid of, but we need to know what we're getting ourselves into before we make that first step.
Yeah, there's a lot of reputable platforms out there now, like Coinbase and Gemini, and then what we were talking about previously, that you can buy through an exchange-traded fund now, whether it's Fidelity or BlackRock or anything like that. So those are more reliable in that sense, but there are definitely scams out there. There's always going to be scams because there's always people trying to make a quick buck off somebody that's naive. So before going into this new world, if you have never been in Bitcoin, if you're just hearing about it now, if you're just finding interest in it, give us a call so we can talk about it, talk about your risk, because that's what we're not recommending you go buy Bitcoin, even though we believe that it could be going forward a great thing. We don't know your risk. We don't know what you can take or how much you can put into Bitcoin or anything like that. So give us a call and we can go over your risk tolerance and go over what you can do with everything in your portfolio.
Yeah, there's a lot of other cryptocurrencies out there that who knows, really weird names out there. There's a lot of exchanges that you shouldn't trust. There's even ETF companies that maybe you shouldn't trust if they're able to stay solvent. I mean, that's what you're betting on some of the times. So there's a lot of risks out there when it comes to this new risky space. Also AI, anything with the word AI on it doesn't mean you just invest in it, right? If it has the word quantum in it, doesn't mean you just invest in it. There's actually a funny story. There's this penny stock, and it was a quantum energy drink. But it was truly an energy drink, but it had the word quantum in it, and it went up like 1,000% because of the quantum computers got such a buzz in the media.
Wow.
It had nothing to do with quantum, right? And that's just because people are looking for the buzzwords. So you have to be very careful and avoid those scams in terms of investments. But as financial advisors as well, we see it all the time with clients, especially as they near the 70, 80-year-old ages, is the scammers are very smart, especially with AI now. You can even do FaceTime scams, pose as a grandchild, pose as a child, and even my own grandpa, got scammed for a lot of money because people think that they're talking to a legitimate person at their bank. You've said you have your own stories about scams. And so unless you have a financial advisor that you can go back to and say, hey, does this sound legit? Is this something I should be doing? And you just do it on a whim, you could end up losing thousands, hundreds of thousands of dollars. We've seen it.
Well, and to me, a lot of the issue is the fear, right? So if you're being faced with, oh, hey, it's a phone call and, blah, blah, blah. And even when they have all the information and they seem legitimate and they're asking for money, before you make any decisions, check and double check, because that could be
a lot of the time, if it sounds too good to be true, it's too good to be true. So take a step back, rethink it, and just take your time on it. Don't rush into anything.
It's interesting because I have some 20-something really great girls that work with me, and I hear from them, they don't want to give out their phone numbers to people because their phone numbers might be linked to their social media account. And then I said, so what's wrong with that? And they're like, oh, well, then they can just search me up on social media, and I don't know if I want them seeing. And I said, stop right there. If you already know that you're that vulnerable, that your phone number is linked to your social media, and that's how people can find you, then either unlink it or be very conscientious about what you put out there, because anyone can see that. So if you're afraid of that person's going to see it, why not be afraid that your next employer is going to see it or some scammer is going to see it? I mean, these kids aren't thinking through. I'm putting myself out there. I'm making myself so incredibly vulnerable.
And we sign so much stuff nowadays online. I mean, most of house purchases are just DocuSigns. I remember we had to do all the signatures, and it was just a big book. Now it's all DocuSigns, it feels like. But with that comes fake DocuSigns. And you'll get really good looking templates that look exactly like a DocuSign, and then you click on it, and it's a scam. They're in your computer. There's nothing you can do about it. So there's a lot of different tricks that they're doing with emails, with different, looking like one of those virus blockers that on your computer that you can do, and then you click on it, and then it's not a virus blocker, it was the actual virus. So there's certain things that we can help you with as a financial advisor, but we also have resources, nonprofits that we can refer you to if there ever is a scam that had gone too far and it actually has occurred, how to maybe help retain some of that. At the end of the day, as a financial advisor, we're trying to be the steward of your assets, but also be the protector as well.
It's good to be skeptical in this day and age with anything online that you don't know exactly what you're doing. If there's no reason you should be receiving a DocuSign, it probably means it's a scam.
Well, and it is incredible to me how much information is public out there, and you might not know that about yourself, but certain loans you may have had are public information. So if somebody's calling you and going, this is regarding your loan from such and such bank, they easily could have pulled that up, you know.
You want to hear something interesting? We were pitched by an AI company that came to our firm and said, we have this new product that can scour the webs and look up anything about your clients, and if they get a new loan in, say, in another country, we'll know about it, and you can call them and say, hey, I saw you got a new loan, can we help you out with that? And somehow they have a software that can scour everything, and it can know every single financial transaction
That just
you
kind
make.
of
It's all public.
that gives me a big ick.
Yeah, it's
though.
all
all
public
public.
records. But it would take one person forever to find out everything around the country. But AI can just go scour the internet 24/7 and do it.
I mean, look, it's terrifying I feel like I'm right in the middle, right? I'm going to live hopefully long enough to where I'm going to see where all this goes, but I've lived long enough without it to know that this can be really dangerous too. So it's like anything else. If it's too good to be true, it probably is. Why don't we, just proceed cautiously and look at with the experts. This is why we need that education. If we don't have that education, we shouldn't be pulling the trigger on our own. We need to come in and talk to somebody who really knows how to deal with this. One thing you said that I really want to focus on too is that these plans are completely customized for, you said, I don't know who you are or how much money you have to spend or what you have to invest. That's why this is so great, because this is customized to our specific financial needs, and it's not something that you just do once, right? We're going to revisit this because our lives are always changing.
Yeah, we want to revisit that plan at least once a year, especially in retirement, because especially if we start a relationship where we do the plan, we open your account, we want to meet at least annually, so then we can make sure everything's still in line. Do you need more money? Do you spend less money? Do you want to have any new plans? Are you traveling more? Are you buying a new house? Stuff like that is what happens every year. It's just life. So we want to meet constantly to know, and that's what we do, and that's why we want to create the relationship.
1 year
for a
ago, I
long
would have
time.
told you my daughter for sure is going to state school, so we had that financial plan in mind. Then a couple of months later, she decided this other great private school that's quadruple the tuition, and we're going, oh, okay, like that was a big shift. And that kind of stuff happens on a dime, and it wouldn't it be nice to know, hey, I have a plan in place in case, those are good things. You want to be able to make those things happen if you can. But in order to do that, you need a professional on your side. So if these are conversations you've never had with your financial advisor, or maybe you don't even have an advisor and you haven't felt confident enough to have this conversation, either go to greenbergfinancial.com, get their list of quarterly workshops and join one of those, or give them a call at 520-544-4909. Scan that QR code, come on into the office, have that conversation. It's completely complimentary for our viewers for taking the time to sit with us. Find out if you're on the right path to where you want to be for your retirement. It's just, now is the best time. Thank you guys so much. I've learned so much, and you're so young, but you know so much. And so I hope you'll join us on the next one. There's so much more to unpack with Your Money Matters. We'll see you soon.